Florida homeowners are watching their housing dreams slip away right now, not because of a sudden stock market crash or bank failures, but because of a quiet financial poison that is draining their equity from the inside out. Your monthly housing costs are exploding from directions you never saw coming, and as of early 2026, the Sunshine State is officially facing a triple threat of skyrocketing insurance, predatory property tax loops, and a mortgage rate environment that refuses to budge. This isn't just another predictable market cycle. We are witnessing a fundamental rewiring of the Florida economy, where the cost of simply keeping your keys is becoming a luxury that only the ultra-wealthy can afford. If you value your home, your bank account, and your future in this state, you need to understand the forensic data we are about to audit, because the Florida trap is being set right under your feet. Before we pull back the curtain on these hidden economic triggers, make sure you subscribe to Tax Hack Pro. We are the only channel auditing the 2026 legislative shifts and the tax hacks you need to survive this housing reset. Hit that subscribe button now so you can protect your equity before the state's next assessment cycle locks you into a bill you cannot pay. The most critical thing to understand right now is the curiosity gap between the headlines and the reality on the ground. Why are home prices falling in Florida while the cost of living there is reaching record highs? Why is record high inventory suddenly disappearing from the market without a single home being sold? By the end of this deep dive audit, you will understand the delisting crisis that is masking a true market collapse and why the 2026 property tax reform proposals could actually be a Trojan horse for a massive hike in your daily expenses. Number 1, the forensic reality of falling home prices. Let's look at the cold, hard numbers. As of early 2026, Florida home prices have officially dropped 4.3% over the past 12 months. According to the most recent data audited by Tax Hack Pro, the median single-family home price in the state has dipped to $415,000. This represents the first sustained decline in property values since the 2008 financial crisis. But don't let the statewide average fool you. The local damage is much worse. In Tampa Bay, property values in specific suburbs have plummeted by nearly 10% as the post-pandemic FOMO buyers vanish. Fort Myers is seeing a similar bloodbath as inventory piles up faster than a tropical storm. Even Miami, a city that historically remains bulletproof during downturns, has finally seen its median price slip. But here is the twist. Falling prices usually mean better affordability, but in 2026 Florida, it means the exact opposite. Because your insurance and taxes are skyrocketing, a lower purchase price is being completely neutralized. You are paying less for the house, but you are paying thousands more to the state and the insurance carriers. This is causing market stagnation, where homes are now sitting for an average of 49 days, up nearly 70% from the peak of the boom. Sellers are getting desperate, but they are trapped. Many are pulling their listings entirely because they refuse to accept lowball offers, but with 110 consecutive weeks of inventory increases leading into this year, the pressure to sell at a loss is becoming a tidal wave. Number 2, the insurance stabilization lie. If you listen to state officials, they will tell you that the Florida insurance market has stabilized due to the 2022 and 2023 legal reforms. At Tax Hack Pro, we call that a statistical mirage. While it is true that the rate of increase slowed in late 2025, stabilization at record high levels is not relief, it's a permanent tax on your existence. Florida homeowners are now paying an average of $3,480 annually for basic coverage, a 34% jump in just 3 years. In Monroe County, that number is a staggering $9,058. The real reason your rates are staying high is reinsurance. The companies that insure your insurance companies have hiked their rates by 100% because of the $200 billion in combined damages from Hurricanes Ian, Helen, and Milton. Furthermore, Florida accounted for 76% of all homeowner insurance litigation in the entire United States. Even if you never filed a claim, you're paying for the billions of dollars in fraudulent roof replacements and legal battles of the last decade. 10 companies have already gone insolvent and fled the state, leaving you with Citizens Property Insurance, the state's insurer of last resort. This is a government-backed monopoly that often provides less coverage for a higher price, and in 2026, it is the only option left for millions of Floridians. Number 3, the 40% property tax explosion in the last 3 fiscal years. Florida property tax collections have reached a massive $59.2 billion. This represents a 40% increase in revenue for the state, growing twice as fast as the population and inflation combined. The driver is simple math. your home's value doubled over the last 10 years, and even if your local government kept the millage rate the same, your bill exploded. The median effective tax rate in Florida is now 1.14%, significantly higher than the national average. There is a 2026 legislative battle brewing that you must watch closely. Lawmakers are pushing House Joint Resolution 201, which aims to eliminate all non-school property taxes for homesteaded properties. This sounds like the ultimate tax hack, but the math doesn't work. Eliminating these taxes would create a $43 billion hole in the budget. To fill it, the state would need to hike the sales tax from 6% to over 8.85%. This would shift the tax burden away from property owners and onto everyone else, including renters who get no equity, but will pay more for groceries, gas, and medicine. Subscribe to Tax Hack Pro now to see our full audit of the sales tax trap that could make your daily life more expensive than your mortgage. Number 4. The mortgage rate. Lock-in gridlock mortgage rates in early 2026 remain stubbornly stuck above 6.3%. Despite 3 interest rate cuts by the Federal Reserve last year, the mortgage market has not followed suit. This disconnect has created a lending chasm. A $350,000 mortgage at today's rates costs you roughly $2,212 a month. Just 3 years ago, that same loan would have cost you $1,275. You are paying nearly $9,000 more every single year just in interest. This has effectively destroyed the first-time buyer market in Florida, which has dropped to an all-time low of 21% of all purchases. The median age of a first-time buyer has jumped to 40. Young families are being priced out by a combination of high rent, student debt, and interest rates that make a $400,000 home cost as much as a $600,000 home did in 2021. Experts predict rates will remain elevated through the end of 2026 as the Fed balances a volatile economy, meaning the relief everyone is waiting for is likely a pipe dream. Number 5. The construction cost replacement trap. Construction costs in Florida have peaked at $160 per square foot, a 57% increase in less than a decade. This affects you in a way most homeowners ignore. The replacement cost audit. Even if your home's market value is falling, your insurance company may increase your premium because the cost to rebuild your home after a storm has nearly doubled. Florida's building codes are now some of the strictest in the world. While this saves lives, it also means that any major repair or new build requires high-tech materials and skilled labor that is in massive shortage. Electricians and plumbers are charging premium rates because the supply of tradespeople cannot keep up with the demand from new residents moving in from high-cost states. You're paying for a 1990s house with 2026 construction prices, and the IRS and insurance companies are the only ones winning that game. Number 6. The inventory reversal and the delisting crisis. Florida experienced 110 weeks of inventory growth, but in early 2026, the data shows a strange and sudden reversal. It looks like a buyer's market on paper, but the reality is a delisting crisis. New listings dropped by 7% year-over-year in the last several months, while withdrawn listings, properties pulled off the market without selling, have surged by 60%. Sellers are in a standoff with the market. They refuse to accept 2026 prices because they remember 2022 prices. This has created a ghost inventory, where the only homes actually for sale are the ones being dumped by builders or those forced into foreclosure. This reduces your options as a buyer and keeps prices artificially high even as demand crater. Number 7. The wealthy migration floor. Despite the cost crisis, Florida remains the number 2 growth state in the nation. But the profile of who is moving here has changed fundamentally. The remote worker wave from New York and California has cooled. The new arrivals are wealthy retirees with massive home equity from expensive markets. These buyers often pay in all cash, which means they don't care about the 6.5% mortgage rates. Furthermore, international buyers have returned to the Florida market with a vengeance, increasing their purchases by 51% compared to last year. These buyers, primarily from Canada and Latin America, view Florida real estate as a safe haven asset. This constant stream of high-net-worth cash creates a price floor that prevents a total market crash, but also ensures that local workers earning local wages can never compete. Number 8. The rental market vice. If you think renting is the solution to the Florida trap, think again. Landlords in Miami and Tampa are facing the same 40% tax hikes and 34% insurance explosions as everyone else. To stay profitable, they are passing every single cent of those costs onto their tenants. Average rents for a 2-bedroom apartment in Miami are now hovering near $2,800. Small mom-and-pop landlords are being squeezed out of the market entirely. They cannot raise rents high enough to cover their soaring operating costs without losing their tenants, so they are selling their properties to large institutional investors. These Wall Street landlords have the capital to absorb the costs, but they also have the power to keep rents high and non-negotiable. This is creating a rent-to-income ratio, where the average Floridian is spending over 40% of their gross pay just to keep a roof over their head. Number 9, the coastal climate audit. Properties in coastal Florida are facing an existential crisis. FEMA's Risk Rating 2 has fundamentally changed how flood insurance is priced. No longer based on broad zones, your premium is now calculated based on the specific elevation and risk of your individual lot. Combined with standard homeowners insurance, total annual costs for a coastal property can now exceed $15,000. This is causing a coastal gentrification, where middle-class families are being replaced by the ultra-wealthy who can afford to self-insure or pay the massive premiums. Fort Myers Beach is the perfect example. The modest beach cottages of the past are being replaced by multi-million-dollar hurricane-resistant fortresses. The middle-class beach life is being regulated and insured out of existence. Number 10. The perfect storm with no resolution. Everything hitting Florida right now is happening at the same time. Falling prices, rising taxes, exploding insurance, and stuck interest rates. Usually one of these factors provides a release valve for the others, but in 2026 the valve is stuck. The legislative response, proposing to eliminate property taxes or capping insurance rates, is creating more uncertainty than stability. The honest truth is that nobody knows when the Florida housing market will find its new equilibrium. We are in a transition period that will be painful for anyone who is overleveraged or living on a fixed income. Subscribe to Tax Hack Pro and turn on your notifications. We are auditing every new insurance filing and every tax proposal in Tallahassee to ensure you have the forensic data to protect your assets. This is the time to be proactive. Appeal your tax assessment, shop your insurance carriers every 6 months, and never assume the Sunshine State is a safe harbor for your money without doing a deep audit first. This is Tax Hack Pro, and we are holding the line for your financial freedom in Florida. I'll see you in the next investigation.